Well, VIX traders are betting the VIX will go much higher by 14 February 2024. Is it Valentine's Day present? Well, apparently this is happening right now, and we have to be careful because we do know that the seasonal pattern for January, February for the presidential election year do have a common movement. And this today, I'll share with you more in detail. Let's go. Right. Disclaimer applies as usual, and thank you, Ames, for the kind sponsorship. Now, first of all, right, I have been updating you guys, and I tell you guys that the US LED, the leading indicator, is showing that the potential second wave of inflation coming in. And this mentioned 3 weeks ago. And of course, I told you guys that we even have our food getting more and more expensive. So based on the IMF latest information, it says that inflation to remain elevated until 2025. In fact, it's already they only expect the price to come down by 2025, 2026, 2027. So the thing is this. What do you think now? If this inflation continues to stay at this current rate right now, right, how can we survive this whole movement? This is very interesting. So there's a reason why now, right, there's something interesting happening on the crude oil chart. Now, crude oil has been coming down very steadily since $88 in October last year, all the way down to now $71. I believe that this is done by the White House. And you can see right now, the Brent long position is going high. People are buying into it. So is it because they know that economically we have a good recovery, or is it because that right now the price is cheap, people are buying in advance? So a lot of things happening, but the main point is this: if they are buying it right now, is it because they expect the crude oil price to go back up again? And if the crude oil price goes back up, then what will happen to inflation? So this is a concern, and that's the reason why right now, Raphael Bostic, one of the president of Federal Reserve Bank of Atlanta, he says that the U.S. progress on inflation is likely to slow down. As a matter of fact, he believes that this will need to be concerned because if the inflation doesn't come down and then we cut interest rate, this will cause a very bad decision. And because of that traders are now betting that maybe he's right. Because now Christopher Waller, another Fed chief, also says that, right, we have to be very careful with the rate cuts because you don't come to a point whereby once they start to cut rates, right, and then inflation shoot up, the next thing they do is they're going to go back to hiking rate. That will kill the market. So I've been telling you guys this is very difficult for the Fed to cut rate unless there's something very drastic. So not too sure why these two guys decided to come in right now to speak about this, but definitely this will weigh stock market because the stock market really want the interest rate to go down. And in fact, they're looking at March and April. So if this doesn't happen or manifest by then the stock market will take profit. Now, based on the current US inflation figures right now, right, you can see that it's hanging about 3.4%, all right? It came up from 9.1, we all know that, and now it's hanging at 3.4. Now, this is nowhere near to the 2% that the Federal Reserve wants. So if this number uptick above 4%, this will really rob off any chance of any rate cut in the near term. And of course, the stock market will fall. Now, the thing is this, you can see right now that we have a very strong support for the US 10-year yields at about 3.9%. As a matter of fact, it's all right. I've been telling people this, that if 3.9% hold, we may go back up to 4.15%. And this is actually very possible. And of course, US bond market is very clear. The yield itself is a very good indication of the federal direction. So remember, back then in October, back in October when the yield was shooting up, sorry, wrong color. Okay, just change my color for you. When the yield was just going up all the way from 4% to 4.5 to even 5% back then, I was telling everyone, say, look, there's something that is wrong here as well. And back then, many people were looking at 5.5, 6%. Now, I was once like this too, but when I saw certain numbers, I know that I had to change, and I know that the yield was going to come off, right? So I was very early in calling for this, and truth be told, the yields had to really fall. So that was also when Bill Ackman actually covered his short position on the bond market. So now the thing is this, with the yield now coming down all back to here itself, right? It seems that it's holding water at 3.9. And if any indication that the Fed may not cut rates so soon, it will break above the 4.15%. And if that really happens itself, right, then I think that the market's going to tell you upfront that they are not going to have any rate cut so soon, and the stock market will fall. So now, very important, let's take a look right now. This is the Dow Jones, and I showed you this chart about 2-3 weeks ago. And I mentioned that now the Dow has broke the very important technical point, which is it came from the high back then over here in year 2022. And I said that right now, it will try to go and test 38,000 if it wants. If not, a pullback must hold at about 36,970. Now, this figure has to hold. If the market fail to hold, we may actually see a free fall all the way back to 35,600 value. Okay, and that's a very interesting point, because later on when I show you the VIX chart, right, you may see that this 35,600 may have a bit of link right here. So based on the RSI, which hit the the all-time high level since year 2000 and now, so this could actually bring some selling effect. And of course, the algorithm is expected to follow through, and we do expect to see some selling if the market really can't hold 36,970. Now, this is my TWB chart, and you can see very clearly for today that we're going to see some profit taking. Well, because from my chart itself, we have the boys are already selling. All right, the last 3 days already, we know the boys are selling. All right, so we know that likely the Dow today may touch 37,144. And of course, if the market failed to hold 37,144 for this week, we may see a downside all the way to 36,657. Now, interesting, today my pivot 2 and my KCB are the same level. So that's why law of attraction, I believe that the stack will bring it down to 37,144. And we are already having some shorts in the market. Let's see if this trade will go well for all of us. Now, the thing is this, as you can see here, is our VIX have came down from 20 back in November, came all the way down to about 11 to 12, and that's where we continue to draw our trend line. It's beautiful, it's stopped there. And last 2 days, the VIX jumped up to 13 to 14 level. And about a few days ago, we saw that there's a VIX trader who drops in $17 million bet on the stock market, that it will not, the calmness will not actually stop. And in fact, there should be more what they call volatility in the market. So this guy actually bought in 250,000 call contracts on the VIX with a strike price of 17 that expired on 14 February. So the total amount he spent about $16.7 million. Now, whether he's doing a hedge bet or he's doing a bearish bet, we won't know. All right, there's no indication on that. But the thing is this, well, based on what we're seeing right now, why not? And of course, if you put the VIX beside the Dow Jones, right, I realize that if VIX really go up to, if VIX really goes to the 17, which is somewhere around here back then, and we just do a bit of look at the Dow was trading approximately about nearly 30, let me just take a look over here. Yeah, it's about 35,000 level. Interesting. Okay, so what I'm trying to say is this: if the VIX really shoot up to 17, based on the last time when the Dow was about 35,000, that was where the VIX was at 17. So maybe not. Maybe let's say we do a 36,000. How about that? Yeah, I think so. So maybe when the VIX go to 17, the Dow should come down to 36,000, which is about 1,000 points from here right now. So maybe that is likely will happen. So let's keep this chart alive and see and update you along the way. But more important thing right now is that let's talk about the presidential election. So it seems that every time when during the presidential year, it seems that the stock market will always do better than the bond market, and the bond market will actually goes up. So what is happening right now is exactly is planning for it, and this from 1928 to 2019, right? So of course, if the incumbent president wins, the stock market will go higher. So if we put it back into the S&P seasonal pattern, you can see that usually itself by mid of January, there will be some selling, which is right now. And then this will sell till the end of the month. And then after that, there'll be some sort of strong recovery in February. But very interestingly, by mid-February, there will be some selling, and the selling will bring it down all the way to mid-March. Now, we see last year, in fact. So after that as well, right, you can see that if the market really turned bullish, plus the presidential election year movement, then who knows, we may see an all-new time high by the end of the year, which is very, very possible. So that's the reason why right now, right, if you look at it from every corner, it seems that, right, we do expect some form of weakness in January, February 1st. Then after that as well, right, we should have a good time. And then the next buy dip will be back in June, and that will be just before the presidential election in November, right? So all these tell us that, right, maybe now we should take some profit off the table, let the market pull back a little bit, then get a low price and buy again. What do you think? Let me know in the comment box. Like and subscribe my video. This is Kel signing off. Take care and have a great day. Bye-bye.